Good evening, guys. About 4 o'clock on Wednesday, November 8th. Hope everybody is doing well. Mostly flat day. All three indices, NASDAQ, S&P 500, and Dow, either up slightly or down very low, very small, sorry. Especially the NASDAQ. This is a phenomenal more than five actually, 8 consecutive days of green candles. This one is almost a flat candle up on the day, but still it started higher and went a little bit lower. That's what it's going to look like on the daily chart for the NASDAQ. So the NASDAQ up about, 0.8%, mostly flat, I would say. $10, 10 points on the day. And then if you look at the S&P 500, it was up about 1/10 of 1%, roughly about 4.4 points. And the Dow Jones Industrial Average was down about 40 points, about, again, 1/10 of 1%. One of the stocks that came up on the radar post earnings today was AppLovin. So AppLovin is a company that actually helps you be able to monetize your mobile apps. And they've gone public about a couple of years ago. Thought I'll use our 5-step process to figure out what works, whether it is an interesting company to invest in, and why is it actually showing up in the screeners. So it provides a mobile marketing platform. If you're an app developer and you want to make money, you can monetize your platform using AppLovin. The company went public in the 2021 timeframe, so about 2.5 years ago. Went public and started very, very high in the 60 range, a very good move up. So let's look at the 5-step process financials. Let's start with the annual income statement. Company's done about almost $1 billion in 2019 to about $3 billion. So grown almost 3 times, did phenomenal growth in 2021. Look at that, almost 100%. So it went from 1 billion to 3 billion over the last 4 years. And this year it's going to go a little bit lower, is what the prediction is. But look at this growth. This is 90% phenomenal growth. Roughly about 50, more than 50, close to about 60% gross margins, and negative 10%, 8 to 10% negative net margins. On a quarterly basis, growth has dramatically slowed. In fact, it's gone negative growth compared to the same period last year. So that's a little surprising. But if you look at the Q3 earnings, both EPS and revenue beat. So 854 million beat estimates of 800 million, and 30 cents beat 27 cents, of estimates. So software platform revenues up 60%. That's pretty good. And the total revenue is up 20%, 21% year over year. So I think they're also trying to move up and to the right back again. And that's probably one of the reasons why the stock has shown up on the radar. So $750 million in Q2 revenue, roughly about 400, but 60%, I would say, net margins, now actually making money. So they were going from a point of losing a lot of money to actually showing profit. So this should be a good sign. Looking at the balance sheet, about 5 billion in assets. Oh, a lot of debt, 3 billion in debt. So this is a high debt company. Watch out for that. A little bit of a yellow flag, but nothing too much to worry about until we see why it is actually taken the debt on to a large extent. Their valuation for a company which was growing at about 8%, now it's growing at about 20%, this quarter at least, is pretty high. And the price to earnings is significant because earnings are very minimal. They're just turning a profit right now, so it's still too early. So 60% growth from 63% gross margins, 10% margins, not bad overall. Still a yellow flag on the debt, still a yellow flag on the fact that they're losing a lot of money. So, they're not making growth as much. So actually you can see it started out mostly flat. Stage 1, stage 2, high level growth, stage 3, which is here in this stage all the way to December of 2021, and then a stage 4 decline, a nice base. This is actually a very beautiful base. So if you look at it in a very high level, I'm going to drive from here all the way up till about here, somewhere over there. And this is a nice, beautiful base that it's built. And the high level, if it goes over this range, that means it's a very good signal to think about the 45 range. And that's one of the reasons why post earnings, it's gone to 46. So it's broken through this range right now, this zone. And the base has been built very nicely. It has done a little bit of a stage 1 again. and now ready to take on stage 2. So I think this might be interesting to look at. And if you look at it on a monthly basis, there's still an opportunity for this to go much, much higher than where it is right now. On a weekly chart, there you can see I'm going to adjust the base a little bit better. This is a beautiful, nice bottom that it's built over the last few, I would say, months, all the way from May of 22 to August of 23. So 1.5 years of just building a nice base. It's now consolidated after that nice base. And today, post the this is the resistance at 45. It is actually has broken through the resistance to go to 46. So this expected to move much higher, at least until it faces resistance in the 49 and then resistance again in the 58. It might get a little bit of resistance before that in the 56 range, but you should expect it to do well, given that they're expecting revenues to be able to increase slightly and growth to start petering out again. So this would be the base. On the daily chart, okay, so if you look at the daily chart, this is the channel that it actually had formed, which was a downward looking channel. Staying within the channel for most parts, behaving well, so almost looks like a cup and handle for those of you that are familiar with this pattern. I'm going to draw it a little bit more easy for you to be able to recognize it. And it's broken out of this cup and handle, and now it should hedge much higher. So I really like this right now. This was the resistance before at 44.96. It moved beyond that. Now the new resistance is 46.06. So this was the resistance 44.73. So what would I expect it to do? Look for the candle tomorrow. I really am interested in finding out what the candle looks like tomorrow. Based on that, I would expect it to form some kind of a flag and then move how much higher towards, as I said, the 56, 58 time frame, if you look at it in the long term. So in the medium term, watch for the candle tomorrow, which is February 10th. Post earnings gap up should likely hold till the 46, 47 range. If it is a nice green candle, expect a little bit of consolidation below that, just similar to this, and then it'll make its move back higher. I really like this setup. I'm going to wait for the setup to form. I'm not going to buy tomorrow after earnings. I'm going to wait for a couple of days where it consolidates and then makes a move towards 58. So I'd like to ideally buy it in the 44 range. It might retouch this 44 or maybe even touch the 42 range, somewhere in this range, and then move back again to 50, 56. So that's what I'd like to be able to see. Thank you for watching, and please subscribe, like, and share the channel.